Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Friday, August 2nd, 2019. We are again in the final hour of the trading day, and we are also in the final hour of the trading week. So it's been kind of a wild week. The reason that I like to wait until the end of the day is I feel that the closing price of the day are the most valid prices to make my buying and selling decisions from. That's the time of the day where the market makers and the large institutional financial companies take over the market and, in my opinion, move the prices to where they should be for the day. So they take control away from the algorithms. And, in my opinion, that's the smart money. So again, those are the prices I like to make my buying and selling decisions from. So, all right, just want to make sure that everyone can hear me. Hey, there's Brian 512. Hey, Brian, good to see you. Thank you for coming back. I appreciate it. I was talking to somebody about you last night. I was like, I got this new person that comes to the group, and he's almost 18, and he's interested in investing and trading. And I said, man, I'm proud of that kid. You know what I mean? Taking an interest this young. You will be way ahead of the pack, Brian, if you can, try to put away a little money each month. Doesn't matter if it's $20 or $50 or 75 or 100 or more. If you can do this consistently each month, put it away, and then learn some good investing principles, boy, by the time you retire, you'll be well ahead of your peers. I promise you that. So thank you for coming by. All right, so we are having another wild day in the market, everybody. I'll tell you what, this has been a wild last few days. We were fortunate enough to kind of navigate through this and actually make money, which I'm very grateful for. Very, very grateful for. Actually, we're up again today. I'm definitely grateful for that. There's a lot of stuff to get through today. There's a lot of potential entries for today on these deep dips. So, we're going to go through them. We're going to take a look. We have to be careful, right? And account for a lot of different things with this kind of volatility. So the first thing we're going to do today is we're going to run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We're going to go through my current positions. We're going to take a look at when I bought them, why I bought them, and how I'm going to manage them moving forward. Then after that, we're going to do just a few minutes on trader psychology. Not too much today because we have a lot to get through. And then we're going to go through my watch list, each stock one by one. We're going to analyze all the technical levels, and we're going to see if there are any potential entries for the end of the day. And then after the market closes, if you have any questions whatsoever about what I discussed, please let me know. Don't be shy. You can just type it in the chat, and I'll do my best to answer them for you. So, all right. So let's go ahead, get that legal disclaimer out of the way, and I will be right back. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, Brian says, thanks, man. That's the plan. Good for you. Proud of you, Brian. Really. Really, really am. Okay, so let's get to it. First of all, what I want to do is I want to go through my current positions. We can talk about when I bought them, why I bought them, how I'm going to manage them moving forward. Okay, so IWM. I did buy IWM back here on the 28th of June. This is a mechanical trade, a robot trade. I purchased when the 10 crossed over the 50. That's my entry signal. That's a good long-term back-tested approach to trading IWM. So I did buy it here at the end of the day. The next day it gapped nicely in our favor. I took off about 25% of the trade because, as you know, I like to phase out as the market moves my way. Since then, it moved sideways. It did have some up days. I was able to scale out of more of the position. So 25 here, and I scaled out of about another 25 here. When we got back down here into the value zone, and I had this nice V2 entry, day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1. I added my second half of the position because I only added a half position over here. So, I'm not averaging down. Don't look at it as I'm averaging down. I'm just taking a half position to begin with and looking for a secondary entry trigger to get me into my normal regular full position instead of taking the full position over here. Ever since then, it's moved nicely. We phased out of a lot more. Currently, we actually phased out of one yesterday as well. Currently, I only have about 30% of this position left because of the phasing out on the up move. So there's not a lot of emotion associated with this trade because I have such a small position size, but this is a mechanical trade, so I'm going to see this through. My stop is going to be if a 10 closes back below the 50, or if it continues to move up, I'll phase out until I'm out of shares. Now, if I get another signal, because we're still under the 1050 cross, if I get another signal, I will go ahead and just go back up to full position again. Like, for instance, say we went below the 200 and back above the 200. I might add 70% more of the position back up there because we're still under the cross. So last 2 days been pretty brutal. Glad that we took off some up here when we did yesterday. So we'll see this through. All right, next position is Merck. Very glad that Merck's up today. I mean, to have anything up today is a freaking miracle. So, excuse me. I did buy Merck on the 31st of July, and why did I buy it? Well, on this particular day, we had a few things going on. We had the 520 EMA cross. We had earnings the day before. It moved up, came back down, but it held the support level of this previous resistance. This used to be the previous resistance, and then we broke above it. Now this becomes support. MACD went positive. We were above 50 RSI. I just like to look at this chart. And as you can see, since I bought it, it has moved up our way. We did hit one profit target, or two profit targets yesterday, and we did hit one profit target earlier today. So, and the relative strength of this trade is very, very strong compared to the rest of the market. So I imagine if we would have an up day in the market, we would have a real up day in Merck, because even though the market's down, people are still wanting to own Merck. So this has been a really good trade so far. Did hit one profit target today. So, right now we are, let's see, we're getting close to about 1 ATR away from our entry. So moving forward here, I'll either be looking possibly for a close below the 5-day moving average or a close below the previous day's low as my exit. But couldn't be happier that we are up on this trade on a down day like today. All right, here's the SPY. So as many of you know, I do buy the SPY each day at the close of each day, and I sell it first thing in the morning. And I'll get to why I do that in just a second. But yesterday we did buy this here at 294.84, and we sold it first thing at the open this morning at 293.80. There was a loss on the trade, not a big loss, but the bigger picture here is we avoided the rest of this junk, right? So you might ask, why would you just buy every day for no reason? Well, it's not for no reason. This is based upon a study from Liz Ann Saunders at Bespoke Invest. So there's two approaches to this. One, you could either buy the SPY at the open each morning, and you could sell it at the close in the afternoon You could do that every day, but if you did it this way from 1993, you'd have actually returned a negative 13.9%. But if you do it the opposite way, which is I do, I buy the SPY each day at the close, and I sell it the first thing on the next morning. And if you did this method, the method I use since 1993, you'd have actually returned 634.2%. Compared to doing it the opposite way where you lose 13.9. So what this is telling you is that all of the price increases in the S&P 500 since 1993 have actually been have been bid up in the aftermarket and the pre-market and then sold into during the regular market. So that is why I do buy the SPY each day at the close, and then I sell it first thing in the morning. You can see the chart. The blue line here is the buy in the afternoon, sell in the morning. You can see it has an incredible edge since 1993. And the orange line is the buying in the morning, selling in the afternoon. You can see this has a negative edge. So, for those of you who are day traders, strictly, day traders, keep in mind, look at the difference. The holding overnight is actually just an edge in a holding overnight. The getting out and not being in the overnight is a negative edge. So this has worked very well since 1993. Who knows, this could be the last day that it will ever work. We never know that, right? Because we're speculators, but the track record is good. So I'd rather go with something that has a proven track record than doing something that has no track record. So it does have drawdowns. We have to be mindful of that. That's why we always have to position size conservatively. I take a 10% position size each day, right? So if I had $100,000, I would buy $10,000 of the SPY at the close and sell $10,000 the very next morning. But it has drawdowns. So, this is a long-term system with an edge, but you have to stay in the game long enough to let this edge play out for you. So, that being said, that is why I sold the SPY here right at the open. I will buy it again today at the close. Hey, Andy's here. Hey, good to see you, Andy. Thanks for coming. Hey, Steve Burns. Hey, buddy. Good to see you. Thank you so much for coming. It's always an honor to have you here. Steve says, learning to play defense in trading can save you a lot of money. Most new traders only focus on making money with offense. And by defense, he means position size, stop losses, trailing stops, diversity in position, correlation, diversity in types of signals. So true. I mean, listen, it's not about making money. It's about trying to sidestep losses too, right? A penny saved is a penny earned, right? So, and it's so true in trading. It's not just focusing on money, it's focusing on staying out of big drawdowns, because every time you're not in the market and the market goes down, you've theoretically saved money, right? It's just like in music. And sometimes music isn't just about playing the right notes. It's about not playing the wrong notes. So really good point, Steve. So, the market has been going up. It's been going up. It lulls people into this complacency of thinking it will never go down. But if you've been trading as long as Steve and I have, and been through the 2000, .com bubble burst, been through the 2008, 2009 financial crisis, that these things can happen. So that's why I'm always conservative, and I always do what Steve just mentioned there. I position size correctly. I have my trailing stops. I'm diversified in the type of stocks I have. I don't buy before earnings, and I diversify in the type of signals, right? Different trading approaches, and that's what I do too. So really good advice, Steve. And we've been fortunate enough these last few days to really sidestep all of this mess. But now we have to look and see, there are going to be some dip buys here. And it's scary. Everyone's waiting for dips to buy. And when you look in the rearview mirror, you're like, I should have bought that dip. But dips are scary. That's why they have a lot of potential reward to them, because they are scary. There's a lot of emotion in the market. All right. So that's SPY. I will be buying SPY again at the end of the day. Did take a small loss overnight, but we'll buy this at the end of the day. XLU. So, okay, I did buy XLU yesterday. We had this nice V2 entry inside of the value zone. We moved down, we moved back up, we came back down, but then here's our V2, day 1, day 2, day 3, day 2, washes out day 1 nicely. Day 3 closes above day 1's close. It also closed above the 50 RSI. It closed above all the moving averages yesterday. Today it has gone up, not a lot. We did hit one profit target up here earlier, which was nice. So my initial stop on this hasn't gotten really high enough for me to start trailing my stop. So my initial stop is halfway of the washout bar. This was the washout bar. Day 1, day 2, day 3. Day 2 washes out day 1. So that's what I mean by the washout bar. It has to wash out the previous day's low and then go back the other way. So we'll just monitor this. I mean, it has moved up intraday a bit. Now it's back down. Now it's getting close to even again. But right now, it's hard to say. We'll just have to see how the price action. But right now, my thought right here is halfway of the washout bar. But luckily we took about 12% off today, right? That's what I like about phasing. Even if you're wrong, you do lock in a little profit up here. Even if you're wrong on the trade, you've paid for many, many, many commissions. So let's see where we're at here. All right. So that's it, basically. IWM, we're under the 1050 crossover trade. Merck, happy that that's up today. We hit one profit target. SPY took a small loss overnight. Be buying this at the end of the day. And then XLU, at least positive for today. And then I guess I should also mention, you guys remember that I sold the put on Johnson & Johnson down here to 122. That expires today, so it looks like I'll be able to keep the full premium. And just real quick, you know, I picked the 122 strike price because on 3 time frames it shows some support underneath. Like here's the 1 ATR channel. The 122 price is above that, so there should be buyers coming in there. That's some support. On the weekly, it lined up right with the 3rd ATR channel. So on the weekly time frame, I also saw some support at my strike price. And then on the daily, I found support right here about the 6th ATR channel now, and also back at the very, very lows back in December. So anyway, that was a good options trade. I'm pretty sure that's going to expire today, worthless, which means I'll get to keep all the premiums. So I'll be looking for some new puts to sell next week. And the market is very volatile, therefore the options prices, if you're selling puts, are going to be high because of the volatility. And that's really when you want to sell puts, in my opinion, is when volatility is high, because you get the most premium. Okay. Now, just real quickly, I just wanted to show you this. You know, we usually do something on trader psychology every day. This isn't so much trader psychology, but I think it's helpful. But look, the expert in anything was once a beginner, and I was once a beginner. Steve Burns was once a beginner. Ray Dalio was once a beginner. Paul Tudor Jones was once a beginner. So, you know, if you're just starting out in trading and it all seems very complicated to you, don't worry about it. I mean, if you work on it, if you study, if you work on it each day, it will start to come together and make sense to you. And if you do it consistently, you know, you do it for years consistently, you too can become an expert. It's really, really true. So just like this little kid here, just little starting out in t-ball or just little league baseball, you know, one day he may be in the big leagues. But you know, don't get discouraged. Don't get down if you feel like it's not coming together. Sometimes it just takes a while to click into your brain. And the best way to get it to click in your brain, everybody, is to work on it every day. Just like anything else. If you want to get in shape, you go to the gym every day. It doesn't have to be a lot, but you know, you just work on it, do your best every day. But the key is consistency. Look at your charts every day, study every day, and you'll be amazed what can happen. All right. Well, let's start going down through here and see if we have anything lining up for today. Should be interesting for sure. All right. Well, let's start with Apple. Boy, oh boy, oh boy. Apple's looking pretty nasty, isn't it? After that big gap up and just giving it all back. Well, you know, we are in the value zone. Certainly don't have a V1 or a V2 or anything going on here like this. I would be scared to take any trade here. Doesn't mean it won't go up, but what I'm really keying off of, what I'm kind of putting up on my wall, printing out and putting up my wall, is I would like to buy Apple down here, possibly the 50-day moving average or the 100-day moving average. I mean, a lot of times these big monster stocks go into these big uptrends, and they do pull back to these levels. You know, this 100 right here, 100 third ATR channel, 50 day moving average. I think this would be a good area to possibly take a look at Apple, but nothing on Apple today. AGQ, well, nothing today. It is down today after that big rally after yesterday. It's just too high. You know, I'd like to buy this down here in the value zone, V1, V2 in the value zone, or possibly back down here at the 50 or the 200 would be a good location. Or if the 5 EMA crosses under the 20 EMA and then back over. That 520 EMA crossover we took here back on July 10th, when the previous day the 5 was under the 20, the next day it crossed back over. This was a mechanical trade. You can see this was a really nice trade for us. I scaled out all the way to here, ran out of shells. Well, I guess shells. I ran out of shares here as well, but that was a really sweet trade. Very simple trade, just based upon the 5 crossing over the 20. So we ran out of shares here. Nothing yet today. Looks like we got the meat of it up here, but again, we kind of need this to reset, either a V1, V2 in the value zone, maybe back down here, the 50, the 200, or a 5 crossing over the 20 and then back over. So nothing on silver today. Whew. AMD. So obviously there's been a huge amount of distribution, a huge amount of selling in AMD. People are just wanting to get rid of it for whatever reason, probably based on earnings and the new tariffs with President Trump. I mean, we are down here at the 100-day moving average. It looks like we did reject the 100-day moving average and close back over. You know, I think it would be valid to buy here with just a close below the 100-day. It's scary as hell. I totally get that. I'd feel better if we were like at a 30 RSI here, but we're not. The other thing I'm concerned about is we have the third ATR channel above us. So I think there's better, but you know, just from a teaching perspective, yes, I mean, you could buy this at the end of the day with a close, any close underneath the 100-day, giving you, you know, at least limiting your downside and giving yourself some potential upside, because potential upside's probably up to here, back up to the 50, I would imagine. So, you know, your risk or your reward is this much and your risk is, you know, theoretically this much. So it does work out, but I don't like that it rejected the third ATR channel above it today, and it's not quite low enough RSI wise. I mean, I think there will be buyers coming in here if we get into the 30 range. So there's probably another group of buyers under here coming in, maybe theoretically. But you know, I like to get into something when I know there's going to be other buyers, and there might be some buyers here today. I mean, there was at the 100, but I don't like the third ATR channel above it. So nothing on advanced micro devices. Amazon, boy, you know, I'm always amazed how everybody wants it. Nobody wants it. I've been doing this for 24 years, and it still blows my mind that I gotta have it. I gotta have it. I gotta. Oh, no, wait, no, I don't want it. I don't want it. I don't want it. Right? People get down here. People get depressive, and up here, people get manic. You know. And, you know, I always mention about it's difficult for stocks to get above the third ATR channel. They do go up at times, but a lot of times they fail. But, you know, you look at the news or read websites about Amazon. Up here, everything seems great. But time and time again, buying at these high levels, when you look back in time, is not a good idea. And time again, buying the dips is a good idea. But it's scary to do. It feels good to buy up here. You feel like you're in good company. It feels really bad to buy down here. It seems like nobody wants it. But, you know, have your signals, have your guidelines. And right now, my guideline is a close back above the 30 RSI. We're under the 30 RSI. We're 28.33. So that all the buyers that came at the 30 RSI still were not able to hold Amazon up. That's not a good sign, right? Now, if Amazon closes back above the 30 RSI today, I'll go ahead and take it. I will go ahead and take it because that is a valid signal. And there's sometimes you don't get a lot of chances on big stocks like Amazon, but I will be entering Amazon if and only if we have a close back over 30 today. Boeing, we're kind of hugging that third ATR channel. We are actually up today, which is interesting. Do I want to buy this? No. There's no V1. There's no V2. There's no double bottom with a bullish divergence. We haven't gone under 30 back over 30. So still, in my opinion, this is still kind of in no man's land. All right. Next on deck, Alibaba. Well. You know, I talked yesterday about, I didn't take this trade, but I did talk about, okay, you know, it did reject the 200-day pretty well, close back above it. It would have been legitimate if you wanted to go ahead and buy this right here. And then if you have a close under the 200, just to get out. You know, if you did that, of course, you do need to get out today. I didn't take this trade because of this big ass bar, right? And I felt there were better setups than this. We're to 34.32 RSI. Again, you know, if this can get down to underneath the 30 and then back over the 30, I would take a position. I would take a half position because it would happen under the 200-day. But you know, Alibaba is really getting beat up with this trade rhetoric because this is a Chinese company. So you know, I am going to be keeping an eye on Alibaba, but I have to have a legitimate signal. You know, and that legitimate signal might be a close back over the 200. Or a close intraday under 30 and close back over, but it's not quite there yet. Oh boy. So Caterpillar lost its 200, 34.85 RSI. It probably got down into the low 33, high 32s or low 33s RSI wise. It's lost the third ATR channel, so nothing on Caterpillar either. Okay, here are the pro shares. This is the DDM Dow. Let's see what happened today. So we opened, we washed out, and now we're getting back to closing higher in the range. Let me see what the RSI was on this intraday. It was 31.16. You know, this is a tough one, everybody. We still have the 50 above us. We still have the third ATR channel above us, acting as resistance. You know, if you stepped in here intraday, I mean, obviously in hindsight, this would have turned out to be a good trade. I probably would not have done it. So I think I'm just going to let this go today. Just a quick example of a previous trade on DDM. We did buy the DDM when we closed back above the 200. And if we would have closed below, I would have gotten out for a small loss. But if it went our way, as it did, we just hold on to it. This was a mechanical trade. Just hold on to it, scale out till we're out. And I scaled out right up to about here till I ran out of shares. So, you know, this is somewhat interesting. I mean, it did reject the 100, which is positive, but it is getting rejected by the third ATR channel and the 50 above it, which is not so positive. So, not a perfect trade here. Okay, here's DIA. This is the single leverage. This is your regular Dow Jones. You know, I do like this one a little better because we did go underneath the 50. And currently at the moment, it looks like we are above the 50-day moving average on the plus side. On the negative side, we're still below the third ATR channel. On the negative side, we have a big old bar yesterday on a lot of volume. One thing to notice here, though, yesterday we went down on a lot of volume. Today we're down even more, but the volume is less. And I was mentioning this on the podcast yesterday. That, in my opinion, I view that as bullish. When you continue to go down, but the volume gets less and less and less. In my opinion, those are kind of some weak hands shaking out. There's less people jumping in and selling than there were the day before. So let's just go ahead. I'm going to mark Dow here, and we'll see where this finishes. Disney did try to go below its 1 ATR channel, reverse back up. It could trigger a V1 today, actually, if it closes above yesterday's close. But this bar here is larger than 1 ATR, so I don't want to get in front of it. Actually, earnings are coming up too, so that's a negative sign. So nothing on Walt Disney today. Just to show you a prior trade, we did buy Disney back here on the 3rd of June when we had this nice V2 within the channel. Day 1, day 2, day 3, day 2 washed out day 1, day 3 closed above day 1, giving us a legitimate V2 signal within the channel. Was above the 50 RSI as well, and this was a nice trade. We scaled out all the way up to here. So nothing on Disney today. Oh boy. All right, everybody. Well, there's Etsy. Again, a good example of why not to buy before earnings. So you would have had a mild 11.65% loss of your capital if you gambled on earnings. So, what to do with Etsy? Well, here we have a third ATR channel. Here we have a 200-day moving average down here. This is where I feel like some buyers would be coming in. And if we could, in the coming days, go below that and then back above that, that would be a pretty sweet spot. Doesn't mean it would be a profitable trade, but it would be a good setup. It would be a good risk to reward ratio, especially because the third and the 200 are just right there in a confluence right together. So I'm not going to be buying Etsy today, but something we should look at next week. It's important when you see something, stay calm, stay patient. Yes, this is looking like it's, looking like a decent possible place to buy it, but it's not there yet. So sit on your hands and really wait until the price action confirms what you're looking for. Ford Motor Company. Wow. Nothing on Ford Motor. It's under the third ATR channel. Looks like it may have tested the low 30s today, maybe 31 or something, which is good. But again, where would I want to buy Ford here? Probably down here at the 200-day moving average. This is what would get me interested in Ford. So, yes, it's tempting. It's a big dip, but it's not lining up with how I trade yet. So something down here, or here's our previous low. It did find some support here. If we could, like Monday, for example, go under here, back over, under 30, back over, test below this range, then close back up into this range, that might be an entry too. May not have to wait for the 200, but nothing on Ford. Facebook, nothing there. Looks like we've lost the 50-day moving average. A sweet spot for me on Facebook, if it gets there, it might not, would be the confluence of the third ATR channel, the 100-day moving average, and a low RSI reading. This would be a really interesting spot to buy. And these buyers that come in here might be longer term buyers. They may not get shooken out so easily. So again, like I discussed, identify some levels. They're not happening today. Of course, they're tempting, because what about if it almost gets there and goes all the way back up? Well, then you missed it, and that's all there is to it. But, there's plenty of trades that come along that will do what you need them to do. So nothing on Facebook today. 5 below. Oh, man. That's that chart pattern's broken. That stock is broken. We're at a 26 RSI. We have a third ATR channel above us. Even if we went from under 30 back over 30, we're probably going to have some issues here at the third ATR channel. So nothing on that. Gold is, well, it opened lower, is higher than it opened. But there's really nothing I can do here. I'm really looking for a 5 crossing under the 20 EMA and then back over. That would be an excellent area. Or, coming back into the value zone, moving sidewards, having the bars narrow, and then have a V1, V2. I showed you that silver trade with the 520 crossover is a good approach. We took the same trade back here on the 30th of May when the 5 was under the 20, and then on this day it closed back above. Not only did we have the crossover, it was in the value zone. It triggered this fractal back here, and you can see this was a really nice trade we had right up to about here. Then we phased out, ran out of shares. Google. Well. You know, Google had that big move up on earnings. We finally did, 2 days after, we did lose the low of the gap up day. That's not a good sign. And from there, we have moved back down. We are, you know, if you take the low here to the high here, this is the move. 50% from a Fibonacci standpoint should hold some support. And it looks like that's about exactly where it's holding support. It's still too high for me to buy right here. You know, if we could get back in the value zone, back to the 50 RSI, have a V1, V2, I think that would be a good dip to re-enter Google on, but nothing today. Goldman Sachs. Hey, I think the market's rallying. It is, because my screen's going green. Goldman Sachs, couple nasty days here. But nothing here today. IBB down today. I am waiting on IBB. I'm waiting for the 530 EMA cross. That's a good long-term back-tested approach. So nothing on IBB today. Intel. You know, Intel is interesting to me. If we could close back above the 200-day today, ideally the 1 ATR channel also, I would be interested in taking a position on Intel. Let's see, Intel 4893 is the 200-day moving average. So I will be willing to take an entry on Intel if we can close back above the 200-day, because if I'm wrong small. If I'm right, I have the potential for a good rally. So I am definitely going to be watching Intel, but only if it closes above the 200-day moving average. IWM, we have, it is rallying, so that's helpful. Johnson & Johnson, this did create a higher low V1 yesterday. See how we make a lower low, we rally, we come down a couple days, and then we reverse with this V1. This is a valid signal here. What I don't like about it, it was under the 1 ATR channel. If it was under the 3rd ATR channel and then came back up, I would like that, but I don't like it because it's happening right between the 3rd and the 1st. But that was a valid signal yesterday, and it looks like it would have worked out. But it looks like MACD's going positive today too. It is trying to get back above there. Okay, I'm just going to watch that one at the end. Okay, Coca-Cola back in the value zone, starting to move sideways, right? So we have two boxes checked. Back in the value zone, check one box. Starting to move sideways for a couple days, check 2 boxes. But now I need a V1 or a V2 to get me into the trade. I guess technically you could say this is a V1, but this washed out yesterday's low. Not by very much, not enough for me. I'd like a washout like this. This bar washes out that by at least a quarter ATR. This was just barely. So I'm going to pass on Coca-Cola. Lockheed Martin, same thing. We are in the value zone. We're starting to move sideways, but I need a V1 or V2 to actually trigger me in. MasterCard, well, this thing just went up, would not go down, and you know, like a lot of things in the stock market, you take the steps up slowly, and you take the elevator, boom, down. I mean, this one day wiped out, I don't know, 2.5, 3 weeks of movement. So that's, you know, that's the reality of when you have a sell-off. You can lose a lot of profit very quickly. You know, 2 days ago, it did bounce off the 50, which was positive. Today, it also tested the 50, closed back above. It's a 45.56 RSI. I know there's probably theoretically going to be some sellers at the 50 RSI. So I don't think right now it's a good risk to reward ratio for me, because my risk would be a close back under the 50 this much. I'd have to have double that up to here to make this worthwhile risk to reward ratio wise. And I just don't see it. So I'm going to pass on MasterCard. Merck, champion of all champions. We did buy Merck a couple days ago, and you can see it has moved nicely for us. We did hit one profit target. So this one's doing well. I'm really glad we have this for sure. Microsoft, been really volatile the last few days. I mean, we did reject the 1 ATR channel. That's good. But these bars are just too big and crazy in the context of where the chart is right here. If we were down at the 30 RSI or down at the 200, that would be different. But inside here in the value zone, it hasn't gone low enough for me to take that approach. Well, Netflix is interesting here. We make this low. We rallied up to the 200 day. Couldn't go anymore. So the people that bought here, when it couldn't move, they sold, just like JT did, if you guys remember. Now we've come down. Now we are working on making a higher low. Let's see. The close yesterday was 319.50. So today, if we closed above 319.50, this would be a valid V, higher low V1. And on it, in addition to that, the reason I like it is it went from under the third ATR channel, closing back in the channel. So this is a potential. If I do buy this today, this will be a half position because we're under the 200 day. Nike. Yeah, this one is tempting also. I mean, we do have big bars. However, we did reject the 200-day moving average. I think it held right at the 30 RSI. We do have the third ATR channel above us. However, there's quite still a long distance from here up to the third ATR channel compared to the distance if we close under the 100. So this one is also a possibility. So there's a lot of possibilities here. We're going to have to narrow these down at the end of the day. Philip Morris moving sideways. That's good. We'd have to look for V1, V2. PayPal. Okay, so what happened on PayPal here, everybody, is we did go under the 30 RSI and we closed back above it. That does give us a potential entry today. So we'll mark that one. Here are the Qs. We did bounce off the 50 RSI. We did bounce off the third ATR channel. Funny how it just caught support there, right, everybody? Let's look at the weekly on this. Well, you know, talking about triple screen, here we are in an uptrend on the monthly. Weekly, we have now poked ourselves down into the value zone. And on the daily, we have bounced off the 50 and the third ATR channel. It's a 41 RSI. Our potential, you know, theoretical profit target would be a 50 up here, and our stop would be a close back below. So we'll mark that one. We're really gonna have to go through these with the fine-tooth comb. Snapchat, nothing there. SPY, well, it did bounce. It, you know, that confluence of the third ATR channel and the 50-day, it has bounced back off of that. It's a 41 RSI. Most likely we're going to run into some resistance up here. I mean, the risk to reward does kind of make sense. Again, triple screen, monthly is up. Weekly is poked its head into the value zone. And daily, we did reject that. That's a tough one, everybody. Let's see. Tell you what, I think I'm going to just let that one go, though, because we have our overnight SPY trade. And this isn't, I mean, it's, you know, I could see where somebody would take this, but because I have the overnight SPY trade, then I'll have double correlation in the SPY. So I'm going to let the SPY go. Square, oh, goodness me. Earnings, everybody, down a mere 14.31%. You know, it did look like it got probably under the 30 RSI today, closed back over. However, I am definitely not going to buy this because the 200 is above us and it's pretty, you know, the risk would be down to here. The reward, theoretical reward is less. So I'm going to let Square go. SSO, that's the double leverage SPY. Same thing as the regular SPY. It rejected the 50. It rejected the third ATR channel. Yesterday we had a down move. Today we have more of a down move. It was on lower volume, so that is a bit bullish to me. But I'm not going to buy this because this would just put me in the same boat as buying SPY. So I'm going to let that one go. Bonds, just rocketing, you know, flight to safety, the rate cuts. But again, here's the opposite. We're going up and up and up, but you see how the volume on the way up here is less than it was yesterday? That's bearish to me. Tesla, nothing on Tesla. There is a V1 technically, but it's up against a bar that's larger than 1 ATR, and it's not close. It doesn't look like it's going to close in the channel. Twitter up today. Wow, that's amazing. UNG all over the place, all over the place. We did reject the previous low, which is good. We're back into the channel. Lot of volume here on gas, but I'm going to let that one go. UNH, nothing there. We did buy UNH here when we closed back above the 200 and it dumped on us here. We took a small loss. No reason to get back in this until it moves back above the 200-day or these other moving averages as well. Oil up today, but below all the channels and all that. The dollar has sold off since it's high. I was telling you guys that I felt like the rubber band was being stretched pretty high over here. The VIX. So where did I buy the VIX? That's right. I bought it right here. This was a huge trade for us. This really mitigated a lot of the losses a couple days ago and then made a lot of money for us yesterday. We had this V2 trade, day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1. This is a nice V2 entry. The previous day, we also closed below the third ATR channel. We closed below the 30 RSI, and on the day that we entered here, we went back above the 30 RSI. We went back above the third ATR channel. We also had a double bottom with the bullish divergence. Here's this low. You can see the depth of the MACD bars. The momentum was high. We rallied. This second leg down, even though we went lower, there was less momentum to the downside. So all in all, that is why I took this position. And you can see it was a huge position for us. I scaled out. I ran out of shares here yesterday. So this was almost from entry to the top of the bar. There was, I think it was 14.5%. I didn't get all of that because I scaled out, but nonetheless, this was a huge trade. Now, it does not always work. I took the same trade here. Same situation, under 30, under the third ATR channel, went back up, but this one was a loser, right? So, you know, show you the winners and the losers. But anyway, this one made up for that one and a lot more. So this was a great trade, but we did run out of shares yesterday right here. Verizon, oy vey, all over the place, nothing there. Walmart, boy, this is a tough one here. Here you have a V1, you have a rejection of the third ATR channel, you have a rejection of the 50-day moving average. That is positive. The V1 is up against this big old bar. It is up on the day. Let's look at the weekly. Not quite in the value zone. I mean, using the 50 as your initial stop does give you a good risk to reward regardless, even if you're able to just make it back up here. Okay, we'll just keep that one real quick. Energy, no. Financials, same thing as Walmart, rejected the 50, close to a V1. Let's look at the weekly, back into value. Boy, these are tough. These are tough. I think I'm just going to let that one go. Real estate up today. Yep, real estate is up today. MACD went positive, you know. But we're moving up higher today on lower volume than yesterday. So nothing really there. Utilities, we did buy yesterday on that V2 back in the value zone, did hit one profit target, so nothing there. Healthcare. Nothing on healthcare either. No, and pharmaceuticals. No. All right, so let's start whittling down through the stocks here, and then I'll get to your questions and comments. Oh, let me see real quick. Yeah, Steve said after my V1, the 1030 triggered. Yeah, that was a cherry on top. That helped move it for sure because people that were probably short VIX, you know, saw that counter signal and they had to get out, cover their position, and buy. So it was a whole nother group. Mount Doji says TVX had another good morning. Yes. All right. So I'll get to these comments. Let's take a look here. Is Amazon going to close above the 30? Well, it doesn't look like it so far. Dow Jones. Facebook. Facebook definitely does not look like anything. Intel. I would like to buy Intel if it closed above, but I don't think it's going to. Well, I don't know yet. I guess I shouldn't say that. Johnson & Johnson, no. Netflix. I would take that V1 if it triggers, but it doesn't. It's not there yet, that higher low V1. Nike, it is a 3062. It's right at the 200-day moving average. Honestly, right now, to me, Nike looks the best. PayPal is now back under the 30. That's not a good sign. $40.44. All right, we have to be really careful here, everybody. Amazon is below. The Dow is holding. Intel is below. Netflix not there yet. Nike looks the best to me. So I'm going to queue Nike up here, everybody, for market on close order. So
order cancelled.
All right, it's not going to let me do that. I think a lot of these are going to be a photo finish.
Order cancelled.
Yeah, doesn't let me do it. All right. Fine. So PayPal's at 29.68. Still a lot of volume on that selling. Well, this is all pretty serious today. I'm not even sure the Dow is going to close over that 50 now. Let's see, what is that 50? That 50 is 264.43. It's right there. Intel is below. Netflix is not there. Nike. PayPal is below. The Qs. You see how VIX, we went up higher today, but you see how we went up higher on lower volume? You know, to me, the way that I read that is bearish. All right, Amazon's still below 30. $48.93 on Intel. So we have 4 minutes. PayPal is back above 30. Tell you what, because I'm not going to have enough time to do this. Also, I am going to buy
order partially filled.
Right now I'm going to buy my position in Nike.
Order partially filled. Order filled.
81.14. 81.14 on Nike. Amazon still under. Dow Jones back over. Let me look at the intraday here. A lot of volume. Intel still under. Netflix still under. Nike we bought. PayPal right there at that 30. And then the Qs. PayPal's back under. Well. I think I'm going to go ahead and take a position in the Dow. Relative strength wise, it's much stronger than the rest of the market, than the NASDAQ. So I am going to buy a regular position in DIA today. That's the Dow Jones Industrial. And we'll just buy the index.
Order partially filled.
264.60.
Order filled.
264.63. Oh. Uh-oh. Yeah, okay, we're good. We're good. Let me make sure we're good. Yeah, and then Nike. Okay. All right. So we should be good. Amazon closing in over 30. We did buy.
Order filled.
All right, that's it.
Order cancelled.
That's it. So where did we buy the Dow? 264.81. All right, we did buy the Dow Jones Industrial, 264.81. And then Amazon did close below, so there was no trade there. Intel did close below, there's no trade there. Netflix did not quite trigger that V1, so no valid trade there. Nike we did buy at 81.14, it's 81.12, so we do have a full position there. PayPal did close above the 30, so You know, I didn't get that, but that's okay. And then the Qs. All right, so we did enter two new positions today. We entered the Dow 264.81 with that close under the third ATR or the 50-day moving average, and then close back over. The reason I picked the Dow was it was only down 0.35%. It was down a lot less than the NASDAQ. And then I did buy Nike here with this confluence of basically a 30 RSI right at the 200-day moving average. So I did have a green day today. Unbelievable. I am very, very thankful for that. And that mainly had to do with Merck going up and XLU going up a little, but hitting some profit targets up there higher. Whew, what a day, huh, everybody? What a week. You know, I'm glad to say I hit an all-time. I hit a yearly high today. Very grateful for that, and that's because of the VIX position, essentially. So yeah, good. Always good. All right. So I know I've been jabbering here a lot, and if you guys have any questions or comments, just please type them in the live chat, and I will get to them and hopefully answer or clarify anything. I do want to mention just real quick before we get to that, just my little daily plug, but I do offer private one-on-one coaching and teaching and mentoring lessons in the evening time via Skype. So, you know, if you'd like to study one-on-one with me, do a one-on-one session on Skype, please reach out to me. My email is in the description of this video, and then my hourly rates are also in the description of this video, or you can send me a message on Skype. But, you know, what we do here in the live stream is good. I think it's helpful for people. But, you know, doing a one-on-one lesson is always better. You know, working one-on-one with somebody, being able to ask questions immediately, and more importantly, in my opinion, is after I teach you, I have you teach it back to me. That way I really know you have it. And if you can't really teach it back to me, then I know you don't quite have it. But it usually starts with just a free phone call or a Skype call. I just want to get to know you better. I want to know more about why you got into trading, how you trade, what your results have been, what your challenges have been, and more importantly, what your goals are. I mean, you know, some people come to me and they say, I want to trade just like you. And I'm like, okay, it's going to take a while because there's all these different things I have to teach you. You're going to have to be in front of your screen. Some people say, hey, I'm a long-term investor, but I want to do better than just, you know, buying and holding. And, you know, that might be a couple hours or 3 hours or 1 hour if they pick it up really quick, right? And then I'll create a approach for you that depends on how often you want to be in front of the screen or how much time you have available for the screen. So, you know, all different types of lessons that we can have just based upon your financial situation, based upon how much you want to be in the market and how active you want to be in the market. And then if you like this channel, you know, please subscribe. If you like this video today, if you found it helpful, please do me a favor, hit the thumbs up button. It helps Google promote the channel more, helps get the channel out to more people. And there's a lot of people out there that have a really difficult time with trading. It affects their financial life. It affects their emotional life. And, you know, that's why I started this channel. I honestly just wanted to help people because I see so many people that go through it. I feel like I know this better than anything else in my life, and this is how I can help the most people. So please do me a favor, hit the thumbs up button, share it with your friends, share it with your trading friends, and help me grow the channel. All right, so there's my daily plug, and let's see if anybody has any comments or any questions. Hey, Frederick's here. Frederick from France. Good to see you, my friend. Hope you're doing well. Mount Doji. Hey, what's going on, buddy? Happy Friday to you. Do you still have part of your VIX? I was telling Bruce about your VIX trade. He was really happy for you. Hey, Murit's here. Hey, bud. How you doing? Good to see you from Norway. Mount Doji says, I really like 0, O. Did I get that right, Mount Doji? Or you like nothing? Or you like the symbol 0? You're going to have to let me know on that one. Max says, how about LMT? You know, Max, LMT has checked 2 of the 3 boxes. We've come back down into the value zone. We have moved sideways for a couple days, but we need a V1 or a V2. We need some kind of trigger. We have 2 of the 3 qualifications, but we still need a trigger. And what I'd like to see, like on LMT, there's some indecisiveness going on here, right? That's why it's moving sideways. I like to see in the coming days a spike down and a reversal back up with the V1 or V2. And you know, what's the significance of that spike down? The spike down is that it's moving sideways. It spikes down, but if it keeps going, okay, we're not interested. But if it spikes down and then reverses, that means that the market tested this level here. The sellers didn't want to sell any more down here. It didn't have the strength to keep going down, and it moved back up, right? And if you're going to get into a long position, it's always helpful to know that in the very recent past, like the previous day, it tried to go down and couldn't, right? That's what gives you the edge on the V1, V2. So 2 out of the 3 criteria are filled. We've moved back into the value zone. We are moving sidewards and stabilizing, but now we need some kind of trigger. William, hey Greg, just stopping by to say a quick hi. Thoughts on CGC if you have time, eyeing a possible counter trend trade here. All right, let's take a look. That's not right. Hey, Cooey. Yeah, well, I see what you mean. I see what you mean here. We have a V2, day 1, day 2, day 3, day 2 washes out day 1. Day 3 did close above day 1's close. It did reject the channel. We went under 30, back over 30. I think I would have taken this trade, William, if I would have seen this today. I wish I would have looked at your comment earlier, but there was just so much to get through. Yeah, I think I would have taken that trade today. And you know, where would my stop be? Well, it's a 34.12 RSI. You know, my stop would be a close below the 30, and my initial target would be a 50 RSI. So the risk to reward is good. We did get the signal, several signals. I mean, we got a V2. It went under the 30, back over the 30. It went under the channel, back over the channel. Yeah, I like this trade a lot. Nice eye on that, William. If I would have seen this earlier, I think I would have taken this. Let's look at the weekly. So on the weekly, you know, the way I look at this is we rejected the 100-day and closed back above. Yeah, really good trade. I would have taken that trade. I would have taken that trade, William, if I would have seen that. Steve says, after your V1 signal in VIX, my 1030 triggered for a cherry on top. Oh yeah, that's right. We talked about that. Yes, you are right. You are right. That added a whole another group of at least people covering their positions, buying power, and possibly people going long with that position as well. Yeah, I'm very grateful for that VIX, Steve. I mean, that made a huge difference in this week for me. Mount Doji says TVIX had another great morning. Yes, it did. Yes, it did. Shoes all got heavily tariffed by China. They took a hit. Yeah, well, we'll see what happens. We did buy Nike today. Frederick, hey Greg, when you spot a V1 or a V2 under the 20 or 50 or 200 EMA, do you take the trade or you want a V1, V2 above the major EMA? It's a good question, Frederick. It depends at what level it's at. I mean, I should say this, that anytime that you have a V1 or a V2 that happens and also rejects any moving average and then triggers back, rejects the moving average and then trigger back above the moving average, that's always, always, always a good sign, right? That's always a cherry on top. But do I take V1s or V2s without an EMA? Yeah, I will. I will, especially if they happen, let's say they happen between the 100-day and the 200-day. Like, let's look at like here on Nike. So let's say that it was a 30 RSI here. We came down, we reversed backed up and created a V1 or V2. We also washed out the third ATR channel, closed back above. We had a V1, V2, but it wasn't quite at a moving average. If it were to wash out the the negative third ATR channel and create a V1 or V2, or it went underneath the 30 RSI, closed back above the 30 RSI with the V1, V2, and but it didn't take out or cross back over any moving averages, I would take that. Yes. So the answer is yes. There are instances where I'll take a V1 or V2, even if they're not around a moving average. I think that's what you're asking. When you spot a V1 or V2 under the 20 or the 50 or the 200, do you take the trade or do you wait a V1? Yeah, what I said. It's better if you also reject a moving average and then close back above it. Yes, for sure. But there are circumstances where I don't have that requirement, but I have other requirements too, right? Like maybe a rejection of the third ATR channel and back over. I kind of look at the third ATR channel as a moving average. I mean, that's kind of how I look at it. Or if it goes under the 30 and back over the 30 in addition to a V1 or a V2 without any moving averages, I will take that too. Max says, what do you think about Bollinger Bands? I've never used Bollinger Bands, Max. I have a feeling that my third ATR channels are similar to what a Bollinger Band does. I actually met Mr. Bollinger once, but I wish I could give you more information on that. But yeah, I've never used them, but I do think that they're very similar in measuring volatility of a move with like 3 standard deviations or close to that above and below. So I wish I could help you more on that. Brian says, I wish I had trading friends. That would make this learning process easier. Well, you have this group, Brian, so that helps. And, who knows? Talk to kids at school about it, or keep coming here and you'll make some friends. But, if you have any questions, Brian, feel free to send me an email. I'd really like to help you get started off on the right foot. But try to come here every day or other trading groups, and start learning a lot. But proud of you, bud. Seriously. Mount Doji says, I closed out my TVIX. Okay. Was that yesterday or today? You were right. You could share your thoughts on zero. Okay. Marit says, when you say 20, 50, 200, were you referring to EMAs? I thought it was standard MA. So you want to put more weight on recent action. Okay. So this is how I have this set up, Marit. My 5 moving average is a 5-day EMA, exponential moving average. My 10-day is an exponential moving average. My 20-day is an exponential moving average. But my 50-day and my 200 are simple moving averages. So 5, 10, 20 are EMAs. My 50, my 100, and my 200 are simple moving averages. Mount Doji closes TVIX today. Okay, good. Frederick, okay, thanks, because I always wait for the V1 or V2 close above an EMA to take the trade, so it's not a mandatory but better edge to wait to close above an EMA or an SMA, whether it's the 200 SMA, the 100 SMA, or the 50 SMA, or the EMAs, which are the 20, the 10, and the 5. But yes, it's always better. But like I said, there are times where I will take a V1 or V2, even if it does not include a moving average. And those times generally are the third ATR channel, a rejection of the third ATR channel, or the 1 ATR channel. If you reject the 1 ATR channel and then you trigger a V1 and it still hasn't closed back above the moving averages, that's fine. So the exceptions for me are if it rejects the negative 1 ATR channel, then closes a V1, rejects the negative third ATR channel, closes a V1, or rejects the 30 RSI intraday and next day goes back above it. It is not zero. Could you please share your thoughts on O? Zero. Well, all I can do, right, is type in O. Right, Mount Doji? I mean, I don't... Zero going to do anything different? No, no. So here's O. That's realty income. Do you mean zero, like Z-E-R-O? No. So if I type in O, this is what I get. I type in Realty Income Corporation. Is that what you're after, Mount Doji? All right, Mount Doji's messing with me now. All right. Frederick says, okay, I see. Thanks, Greg. You're welcome, bud. You're welcome. Wow, what a week. What a stinking week. Be interested to see. Let me see over here. Boy, look at Etsy there. But it does have that nice combo. It has that nice combo of the third ATR channel and that 200 there. Yeah, that might... Well, I'll have to watch that on Monday. If we can go I mean, ideally, if we went under both of these and then close back above, went under the 30, close back above, that would be excellent. All right. All right, that's what I thought. Yeah. So Mount Doji, yeah, here's Realty Income Corporation. So yesterday we did have a V1. It's a higher low V1, right? Here's day one, day two washes out day one, closes above. It's legitimate. I mean, it is a higher low V1, meaning that people bought down here. It went up for some reason, whatever reason, it went back down, but it wasn't strong. There wasn't enough selling to keep driving it down. And actually, you know, here the buyers take control. Here the sellers take control. The people that bought here now sold somewhere in this area. Now the buyers take control again, and this whole group that bought here and sold through here, they're washed out. So this gives some better ease of movement. So would I have bought this yesterday? It's not bad. It's a higher low V1 in the channel. That is good. It looks like it was probably, was it over 50 RSI? 49.83. But, you know, it did close above the 5, the 10, the 20. I mean, it moved nicely today. It was up today. I mean, that's saying a lot, right? Would I buy it right here, right now, the second? No, probably the day to buy it would have been yesterday. It would have been a decent setup. Murat, one of my parameters I check all the time is OBV. If I don't see OBV build up, then I don't take it. I lost almost every trade which I don't have support of OBV. On balance volume. Interesting. Interesting. Yeah, I don't use that in my setups, but I definitely know people that do use it. Interesting. So sounds like it works for you. It's a good filter. Frederick, Greg, so we can take a trade even if the previous day was a down bar larger than 1 ATR or never? Well, as a general rule on a V1, V2, no. But if you have a trade where you have all these other indicators coming in, like it bounced off the 200, maybe went under the 30, back over, that kind of situation, then it's possible. You know, that gives you a little bit more, it gives you a little bit more leeway. But as a general rule of thumb, if you're just looking for a dip buy, a V1, V2 dip buy back into the value zone, you don't want a bar larger than 1 ATR. But if you get down to these deep dips where you have low 30s, you're down at these major moving averages, maybe you have a double bottom with the divergence, you have all these things lining up, and then you get a V1, but the V1 is up against a big bar, then I look at that differently. So I hope that makes sense. But if you're just looking at your regular random V1, V2, like here on Intel, where you move up, you come back down into value, and you're looking just for a regular V1, V2, then I'm not going to take it against a large bar. But let's say today, okay, so this is a decent example. Let me move this bar over. Okay, I hope you can see this, Frederick. Would I have taken, if the market closed like this today, would I have taken the V1? Probably. Are we up against a big bar? Yes, we are. But what else has come into play? We rejected the 200-day, we rejected the -1 ATR and formed. So if the 200 was way down here, or we didn't have any of these accompanying signals, I would definitely not take that kind of V1, V2. But because we rejected the -1 and the 200-day as well, then I would consider taking that V1. I hope that makes sense. Hey, Frank B, good to see you. Frank says, for all, if you're using TradeView as your chart platform, you can add the ATR channel study, which is very similar to what Greg is using. Oh, good. Thank you. Thank you for that, Frank. Sometimes they're called ATR channels. The other option is Keltner channels. I know I've had a lot of people say, hey, I don't see ATR channels, but I do see Keltner. Yeah, very, very similar. Murat says, you need a lot of buying or selling to change the direction of OBV. If OBV is heading in one direction, the price most probable move is in that direction. That makes sense because you have more volume, you have more buyers, you have more, quote, votes that something's moving a certain way. Mount Doji, if you like CGC, do you also like Crohn's setup? Yeah, it's similar. When I look at these two charts, for some reason, I like CGC better. I mean, we did trigger a V1. We did reject the channel. We did have the gap. I'm not sure I like the gap as much here on this one. Here's the previous low. This is going to act as resistance. It did not quite get above that previous low back into the previous range. So it did find resistance from there. And we did come from a lot longer down than here. So there's Crohn. Let me look at CGC again for some reason. Yeah, I do. I definitely like CGC better because one, we did not have to move so far back up. We did close above. See the previous range here, you guys, right here. Do you see how we just poked our head back down, went right back up, and we didn't have to go from way down to go way back up to do it. We just poked our head down once. We triggered the V2. And we closed back over this previous low, so we're back in the range. If you go to Crohn, see, well, it did go back up into that range. It's, yeah, I like that. I like the other one better. I like the other one better. And went under the 30 back over. Yeah, it's similar, but mainly because it did not have to move as far back up on CGC in relationship to that down bar. And on Crone, you have the -1 channel right above you, where CGC, you have more room until you get to the -1 channel. Murat says the best setup is sideways movement while OBV is building up. This means in positive days, many buys, and in negative days, not many sells. Yeah, I mean, it just kind of dovetails to what, we talk about as far as having consolidation, and consolidation leading to big moves and big moves losing back to consolidation. So what Murat's talking about here is having, sideways movement, which is good anyway, at the same time while on balance volume is building up. Frederick says, okay, understood, Greg. I need more indicator confirmation to take a position after a big bar down. Exactly. Murat says, a very good example is Twitter. Even when the stock was down, OBV kept building up. I don't have that. I don't have OBV on here, but yeah, it's a good point, Murat. Nandoji says, glad you broke down CGC versus Crone. I'm going to post a would-be rather poll on Twitter as a fun little study. Oh, okay, interesting. Yeah, I definitely, and let's look at the weekly too, right? I mean, we want to look at things in 2 time frames. On CGC, it did reject the 100-day on the weekly. That's good. Let's look at Crone. On Crone, we did not hold a moving average. The 50 was the closest here. So just from the weekly standpoint, CGC did reject the 100-week moving average, where Crone was not. It closed below. So that's the whole other reason I like it better. Does that make sense, Mount Doji? All right, guys, last chance for questions. Otherwise, I'm going to get out of here and call it a week. Boy, I'm glad this trading week's over. I mean, it was actually a very good week for me. I'm grateful for that. But yeah, it was busy week. Murat says, when you look at weeklies, are you looking at 100 DMA or 100 WMA? SMA. I'm looking at the simple moving average. So the 200, the 100, and the 50, whether it's on the daily or the weekly or the monthly, those are all simple moving averages. And the 20, the 10, and the 5 are always exponential moving averages, EMAs, whether it's on the daily, weekly, or monthly. All right, everybody. Well, listen, I'm going to call it the day. It's 2:30. I'm going to get out of here. Thank you for coming by today. Thank you for spending your time with me and investing your time with me. I hope that you're learning something. I hope it's making a difference in your trading. I hope that you have a nice weekend. And, God willing, hopefully I'll see you on Monday and during the last hour of the market. Go out and do something nice for somebody today. Murat says, but it is still days in weekly chart. Not sure I understand what that means, Murat. I mean, if you these are 50, like the 5 and the 10 and the 20, these are periods, right? So this is charting a period, whatever the period is on the dailies. So this is a 5 EMA chart based on dailies. If I switch to the weeklies, this is a 5-week EMA. If I switch to the monthly, well, this one doesn't have it. But they're the same. They're the same across daily, weeklies, and monthlies. It's different if you use an EMA or some other type of, or SMA or some other type of moving averages. But just one more time, just so you're clear, the 5 on the daily, I use the 5, the 10, and the 20 EMA. And if I go to the weekly, it will be the same, but they'll be weekly EMAs. And then on the longer term moving averages, the 50, the 100, and the 200, they are SMAs, whether they're 200-day moving average, 50-week moving average, 200-week moving average, or monthly. All right, Fredericks, thank you. John, hey, John Faridas, thanks for coming by. Hope you enjoyed. I think, your name looks familiar, so I think you've been here before, but thank you for coming by. Frederick, thank you for coming by. Brian, 512, thank you, bud. Hope you have a nice weekend. Murrit. Mount Doji, good to see you. Frank B, nice seeing you. Max B, good to see you. Stephen Burns, thank you for coming by. It's nice to see you again and have you here. It's always an honor. William, thanks for coming by, bud. And Andy. All right. Murray says, yes, exactly. When you say 200 in a weekly chart, that is exactly 200 week moving averages. Yes, that's correct. That's correct. All right, everybody. If you have any other questions over the weekend, please let me know. But thanks again for coming today. I appreciate it. And hopefully see you on Monday. Have a good weekend. Take care now. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.